Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. Now, I know you guys love when I do videos about where the ultra wealthy are putting their money, and sometimes copying their portfolios is a very smart decision. With inflation at 31-year highs, this is definitely one of those times. You're going to want to track where the huge free cash flow is coming from and make sure to allot part of your portfolio to stocks just like that. So we're going to cover 3 stocks today that Warren Buffett is utilizing for his huge free cash flow. Let's get into it. Alright guys, like I said, welcome back. Thanks so much for checking out today's video. Hopefully you find something of value in the video. If you do, please remember, smash that like button for me and consider subscribing to the channel. Also, leave a comment in the comment section down below. It really helps out the algorithm when you guys do that. And like I said, in today's video, we're going to talk about those 3 stocks that have huge free cash flow that can then help you with your cash flow. Because remember, free cash flow is a very different metric, and we're going to cover down on exactly what that means. I'm not necessarily talking about the money that's provided to you. It's not free money for you. That would be dividends. But we're going to touch on what free cash flow is right before we talk about the 3 specific stocks. All right, so let's jump right into today's article. And this one comes out of MoneyWise, and it says Warren Buffett is holding these stocks for the huge free cash flow. And with inflation at 31-year highs, you should too. Now here's basically just a quick example of how free cash flow works and how you can create that number. Because Wall Street pays a lot of attention to companies' earnings, but reported earnings are often manipulated through aggressive and even fraudulent accounting methods. That's why risk-averse investors need to focus on companies that generate gobs of free cash flow. That's cold, hard cash, and it can be used by the shareholder-friendly management teams to do things like paying inflation-fighting dividends, and who doesn't love dividends? Repurchasing their own stock, their own shares, and growing the business organically. So investing legend and Berkshire Hathaway CEO Warren Buffett is famous for his love of cash flow producing businesses, which allows for those things we mentioned. So let's take a look at these 3 stocks, all in Warren Buffett's portfolio, that have double-digit free cash flow margins. Alright guys, first stock on the list today is Chevron, ticker symbol CVX. Now they generated $13.9 billion in free cash flow over the last 12 months and consistently post free cash flow margins in the ballpark of 10%. Now taking a look at what the analysts have to say about CVX as well, you're looking at $118.14 stock as of earlier this afternoon. But Chevron is a strong buy from 17 different analysts looking at the stock. It has a potential upside in the next 12 months of 12.48% on average to a $132.88 price target. Now the high end is $155. These shares have been hot in recent months on the strong rebound in energy prices, but with inflation continuing to heat up, there might be plenty of room left to run. Now, management's recent initiatives to cut costs and improve efficiency are starting to take hold and should be able to fuel shareholder-friendly actions for the foreseeable future. Just last week, Chevron announced that it would boost its buyback program to as much as $5 billion a year, about 60% higher than previous guidance. And as you can see here, the stock still offers an attractive dividend yield of around 4.7%, which investors can pounce on anytime they want to get those dividends. Alright guys, the second company we're going to talk about today is Moodys. Now Moodys is ticker symbol MCO, and they have a whopping free cash flow above 30%. And credit ratings leader Moodys is the number 2 stock we're talking about today. Taking a look at the tip ranks chart for Moodys, ticker symbol MCO, they're around $397.95 today. Now it's not a cheap stock, but it is, all things considered, affordable. And don't forget that you can buy half shares, quarter shares, however much you want to put. You can put $5 into Moodys if you really wanted to. This is a moderate buy and has a potential upside in the next 12 months of 6.86% to an average analyst price target of $425.25. The high side about $50 more than that at $475. Now, these shares held up incredibly well during the height of the pandemic and are up nearly 290% over the last 5 years, suggesting it really is a recession-proof business. specifically the company's well-entrenched leadership position in credit ratings, which leads to outsized cash flow and returns on capital. That should continue to limit Moody's long-term downside. Now, Moody's has generated about $2.4 billion in the trailing 12-month free cash flow, and over the first 9 months of 2021 alone, the company has returned $975 million to its shareholders through share repurchases and dividends. And as you can see here, it does have a dividend a little lower than the others, but the price is also notably higher. We're looking at about 0.64% for their dividend. All right, last up on the list, a stock I am a huge fan of, and that is Coca-Cola. Coca-Cola, ticker symbol KO. This rounds out our list. They have produced $8.1 billion in the trailing 12-month free cash flow and habitually deliver free cash flow margins above 20%. Looking at what the analysts have to say about KO, trading at $54.88 earlier this afternoon, another moderate buy stock with 8 different ratings, but this one has 12.07% potential upside to an analyst average price target in the next 12 months of $61.50 on average and $65 at the high. Coca-Cola has had plenty of ups and downs in recent months, but patient investors should look to take advantage of the short-term uncertainty. Coca-Cola's long-term investment case continues to be backed by an unrivaled brand presence, massive scale efficiencies, and still attractive geographic growth tailwinds. And the company's back to operating at pre-pandemic levels. In the most recent quarter, they posted revenue of $10 billion, up 16% from the year-ago period, driven largely by a 6% increase in unit case volume. And as you can see on the chart here, they do offer a dividend yield of 3.1%. So if you're worried about inflation and you're looking for a strong dividend company, there are 3 options for you that Warren Buffett, the Oracle himself, is putting all of their money into over at Berkshire Hathaway. And like I said earlier, they use that free cash flow method to determine whether or not the company is going to A, be able to pay out the dividends, B, continue to do share buybacks, which always helps out the stock price, and then just be able to continue those over a long period of time. So those are the 3 stocks today, guys. Remember, as always, I'm not recommending you buy or sell any stock at all. I'm just giving you this information for information and education purposes only to kickstart your own due diligence. Make sure you do more research before you invest in any stock at all, making sure they fit your risk profile and your portfolio path. Alright guys, and lastly, as always, thanks so much for checking out today's video. We really appreciate it. If you found something of value here, smash that like button for me, consider subscribing, leave me a comment in the comment section down below. Let me know what you think of these 3 stocks, or if you know of any others that have a equitable or higher free cash flow rating and are providing fantastic dividends so that people like us can continue to invest in them and have green days. But anyway guys, thanks again. Until next time, bottoms up.